Hey everyone, this is Sean Morey joining you with another session of the Lencred Credit Geek Q&A, and I'm joined by my good friend, my partner in crime, and our senior advisor, Dustin Weitzel. How are you, Mr. Dustin?
Very good, and as always, thank you for having me.
Well, you know I love to have you here. I couldn't do it without you. So today we're going to start with, my apologies, that's your pencil, isn't it?
I know.
Today we're going to start with talking a little bit about one of our most popular segments ever, the difference between loans and lines of credit.
Absolutely.
7,600 views over a 2-year period. We're pretty excited about that, considering we put just about nothing into our marketing efforts of this, other than we want to get content out there for our partners, for our clients, and for consumers that just want to know what they need to know about small business from the aspect of somebody who deals with it every day, right?
Absolutely.
So, where I'd like to start is kind of what we talked about earlier, the framework here. So at Lencred, we specialize in unsecured financing. Our
And
core product,
for startups,
Yeah.
which is the hardest to get money for, but go ahead.
fair enough. Our primary product for those startups and those early on established companies is through credit card financing. It is what it is. We're not ashamed of who we are. We're not afraid of what we do. And frankly, we want to shout it out loud as often as we can to as many people as we can, because this is such a great product for that startup candidate that doesn't have collateral, doesn't have cash, and didn't spend 20 years working as a VP at a firm and saved up a buku amount of money in their 401k, right?
Yeah, absolutely.
So, goes by many names: locks, lines of credit, U-blocks, unsecured business lines of credit, credit cards, unsecured bank drafts, singular lines of credit. They all come down to one thing. It's when a borrower extends you a certain amount of credit that has a revolving, typically monthly cycle where you pay a certain amount back, and it's available to you as
Based
you
on
do so.
what you use.
That's
So
right.
if you don't use it, it's there as a safety net. Loans you get when you need the money, lines of credit you get before you need it, because you only make those payments when you're using the money. And hopefully if you're using $4, it's going to make you 20. Right?
That's fair. That's the hose. So with that, tell me this: when you talk to people on the phone, how often, and this is no shot at our consumers, our clients, our partners, nothing. This is reality. How often do they know the difference between a loan and a line of credit, and what's best for their current financial needs?
To be honest, probably 90% don't know the difference, and probably the same amount don't care. They know I need $25,000 or $40,000 to actually get my doors open, get my equipment, pay some payroll, and cover the bills.
Yeah.
And I really think that most of them don't care. They're kind of just saying, I know I need this much money. So that's where our guidance and expertise and advice and education is really going to be beneficial to them.
So slow down. You're giving them too much too quick.
All right.
So we know what kind of the common names are. We know what it is. Yes, a credit card is a line of credit. Let me just stop and say that one more time. A credit card is, in fact, indeed, in every way, shape, and form, a line of credit. Do we agree?
It is unsecured. No
Unsecured.
Collateral. We're not leveraging our home, personal assets, retirement money, anything.
The risk is your credit.
Correct. Your
Right?
signature is getting you this money
There you go.
based on your credit worthiness.
There you go. So we talked about what it is and some of the names for it. So now let's talk about what we call, and what's a very important piece of the discussions we have with every client on a consultation, which is free, by the way, the 3 types of UBLs, or unsecured business lines of credit. So I want to go through each one, and I want to kind of fire to you, and I want you to give me a little bit of what Dustin sees when he talks to people about it, all right?
Okay.
So number 1, vendor credit. Vendor lenders.
It's
is
not
one of
going to
my
do me
great
any good.
teachers.
I don't need a vendor line of credit.
Preach.
No, go ahead.
So let me give you an applicable example where this makes sense, but let me give you the background on what vendor credit is first, and then you take it from there, all right?
Sure.
So, vendor credit. This is going to be basically the equivalent of a store card. Pennies, Dillard's, anything where you have a line or a credit card with just that company. So, Dustin, quiz. Give me an industry where having access to vendor credit is just as valuable as a credit card.
Most, but it depends on which cards you get. So real
Good.
estate, Lowe's, Home Depot, things of that nature would be highly valuable to you.
Okay.
Having a Lowe's card if you're a trucker may not be a huge advantage, right?
Okay.
Other than trying to build business credit,
Of course.
right? And so a lot of times people don't see the value of this, and I might agree depending on where they're at. If they need money to spend wherever, having a mailbox, etc. card probably might not make sense.
Right.
However, if it's building business credit, it's still serving a purpose. But we want to.
Why?
What's that?
Why is that serving a purpose?
for a business line of credit.
Yeah.
Or banks, borrowers, as you build those things, the lower risk you can prove yourself or your business to be, the more funding you're going to get, the better terms you're going to get.
Okay.
Borrowing becomes exponentially easier as you show that you're lowering your risk as a borrower.
Okay, so let me ask you another question, let's move on.
Okay.
What do you get from vendor credit score-wise, if anything?
So vendor scores can be a little tricky. It's easy to build, though, as you're building a Paydex or a Dun & Bradstreet. What we have found, though, is a lot of times an SBA or a UBD unsecured bank draft, some of the sexier money that we don't always qualify for, they're the ones that are going to dive into that. But as a startup, they probably aren't going to care much about that stuff. Because whether you got an 80, which is equivalent to an 800, that's awesome. But for what, 60 days worth of having a card open? That's good.
Sure.
But they probably don't care much about that. So what they're going to do is say, let's look at this person's spending habits, the lines they've handled in the past, and their ability to pay back, and let's give them a little bit of a credit card or a line of credit in that realm and see how they handle it. Yeah, absolutely.
So, long story short, vendor credit has restricted spending access. It's typically going to be, I got credit with this company, so I can only use it for their stuff, right?
Absolutely.
So I can say for a fact that the conference center tables in our conference center 180 feet away were all purchased through vendor credit. The last truck my CEO got, he got it based off of his Paydex score that he built through vendor credit, which is a company vehicle. So the applicability, short-term and long-term, is massive. The chasm is gigantic, right?
Absolutely.
Okay. So you want to know more about that? Subscribe to our channel, and we'll make sure to fill you in more on vendor credit down the road.
And I think the value is definitely there for everybody, but at what time is different for each business.
Sure.
Maybe you don't need it immediately, but to build later is good.
Yep.
Some people can use most of those lines to cover most of their expenses, and they're freeing up that cash they have.
Sure.
That they thought they had to use at Office Depot or Staples. So go ahead.
Agreed. You can get long-winded just like
no,
your
you're
uncle.
good. Yeah.
Or your cousin, I'm sorry. So, number 2, traditional credit. We're not going to spend a lot of time here. Well, you got the radio face, for sure. Not going to spend a lot of time here on traditional credit. Pretty simple stuff. This is a single line of credit. It comes with checks, a debit card. It's completely unsecured, no collateral, no cash down payment, and it only reports to your business credit. Dream product, right?
Only pay for what I use under the business. Awesome.
Don't have to do any cash strategies. It's just fully accessible whenever I need it for whatever I need it for, right? So with that, qualifications. Firstly,
Can I tell you that in being on the phone all day, every day
Yeah.
for the last several years, this is what 99% of the clients feel like they're
no
doing.
way.
Absolutely.
That doesn't shock me in the least bit. Sat in that chair for 5 years, and that was a daily battle.
Absolutely.
I want a single line of credit. So let's talk about it. Firstly, this requires 2 years in business. Not 1, not 1.5, but 2. More importantly, minimum. More importantly, you have to be profitable by at least 10 or 12%, and guess what? You can't hide all your money with the tax man. You write off everything and save a bunch of money at the end of the year, fantastic. You're not going to qualify for traditional credit like this. Beyond that, you got to be doing at least $400,000 to $450,000 in revenue for a product like this to make sense and to pay somebody to go and get it for you. That's kind of the key factor. What you can't do yourself versus working with somebody like Lencred who are experts at that. So yeah, is this a great product to have? But Dustin, you do 100 consults in a month. How many of those 100 clients can qualify for this when you talk to them?
I think less than 5%.
Okay, so 5 out of 100. And so if 5 out of 100 can qualify for
Possibly.
it, statistics would say that less than half of one of your clients is actually going to get it.
That's correct.
Now, you said something great right before this segment that I thought was perfect. You can qualify for this when your business doesn't need money. That's typically when something like this is
Basically,
going
when
on.
you don't need it anymore, that's when the banks are willing to do this for you.
There you
Which
go.
sucks, and you're like, great, awesome, cool. Where the heck was that 4 years ago when I was scratching and clawing and trying to get this done?
Yeah.
But what I think for my clients, it's better to put it in perspective as the lender and say, hey, you want money under the business, not a personal line. You don't want to jeopardize your home as a HELOC. So how do we get that done? Well, you want a business line. What can your business afford? Well, I don't have any profits or any revenues or any business credit history, so...
But I want a single line of credit for 50,000.
Okay, so where's your payment going to come from?
Right.
Okay, well, I did 100,000 last year. Are you profitable? No. Okay, cool. So you did some good stuff. You have no money left over. Again, where is my payment going to come from?
Yep.
So we all know it takes money to make money, but those are the frustrations that we see day to day, and it's okay once you understand the logic behind it. I'm going to stop fighting that battle. It's a losing one. So how do I start building a safety net organically, to say, this isn't how I wanted to get there, but I keep building this safety net behind me, so when I fall back on a net and not back at ground zero, because I keep fighting for something that's not out there typically. And if they do, it's the unicorn situation kind of, right?
Of course.
You can always do some of these things we say are really hard or difficult, but most clients will not qualify.
So I want to leave it with this.
Okay.
I want to move on
Sure.
because, yeah, you know, we can go all day on this. But long story short, traditional credit, the UBD, the unsecured bank draft, the single line of credit, it's doable and it's obtainable, but qualifications are pretty strict. So if you want to know more, again, reach out to somebody like Lencred and we'll give you the advisement you need.
I want to sum one more thing up.
Okay.
If that is the best option, we will identify that very quickly. It's
Yeah.
not hard to identify because we would love one inquiry, one payment, killer line, and awesome cash access. And we're not just a credit card company. We can do those things, just most people don't qualify. And I think that that's a mindset we need our clients to have too, is to understand that we don't just do this. It's that you're probably only going to qualify for this, right? And then use these things as keys to unlocking other doors. But go ahead.
Like you always say, though, you don't know what you don't know until somebody tells you.
Or until you screw it up.
That's right. So moving on, let's talk about the last option, the most popular option that we help people with, credit card financing. 0% introductory rates anywhere between 6 to 21 months on the majority of the credit lines we help people get. Unsecured, no collateral, no cash down payments, no documentation required. Revolving, continuously available, as you always say, for the lifetime of the business. You've got lifetime access to unsecured financing when used properly. More importantly than anything, this helps you to improve your personal credit, start establishing and building business credit, all while creating debt separation, which is something we talk heavily about in our 6 benefits of borrowing the right way, written by our awesome, brilliant, creative, in the weeds, overly analytical, OCD, brilliant, I said that twice by the way,
Is that me?
CEO.
Oh, okay.
Whoops,
No.
not you.
All right.
You may be related to him, but you certainly didn't inherit his genes. Maybe his
They don't
pants,
fit.
but certainly
Yeah,
not his
yeah.
genes. So with that, talk to me briefly about the top 2 or 3 things that credit card financing helps you to create solutions for the most. And, you know, you're talking about any risk industry, high risk, low risk, medium risk, real estate, tax broker, real estate investor, everything in between low risk to high risk. We can help them with that. So tell me, what are the top 2 to 3 things that you support people the most with that type of financing?
So typically it's working capital in general. So
Okay.
whether that's marketing, inventory, supplies, I mean the list is way bigger than 2 things.
Sure.
But a lot of times people say, I need cash. Well, what do you really need cash
Do you really need cash?
Correct, and maybe we can create a solution for that, but you could probably kind of substitute cards to pay other things you were paying for cash and make up for that in the
Okay.
interim, and that's what we're here to do. And
So working capital.
working capital, payroll, keeping your utilities on. You gave me 2, which I'm used to just throwing out.
Hey,
like
I got to
15
challenge you
20
at some
things
point.
on
That's
there,
all I'm saying. So let me help you out here then. As a startup, this can work for just about everything, right? Even cash-related finances, where we can help them
To a
with that
certain
purchasing piece.
Point, absolutely.
So
So for real estate, renovations, contractors, certain things like that, even down payments, things like that. A lot of times
everything, right?
pretty
So
much-
it was a trick question, everybody. You can use this as a solution for any of the startup needs. But if you want it to be easy, if you want your cake and you want to eat it too, go find you a venture capitalist investor, go use the collateral for your house as down payment, etc., etc. Do not go into a product like this thinking it's going to be as easy as just 1, 2, 3. But is it as complicated as trigonometry? No. But does it require you to pay attention a little bit to what you're doing and be intentional with your spending actions? Absolutely. So, I want to leave it at that. We will absolutely go into more detail on all 3 types of these unsecured lines of credit. And of course, Dustin already spent, most of our segment on traditional credit because he knows how valuable it can be. But with that being said, all jokes aside, we hope this segment was helpful in you guys understanding a little bit more about the types of unsecured lines of credit that are out there, and understand that credit cards are not taboo. Credit cards happen to be one of the products most popularly used by small business owners. So, from me and Dustin, thank you so much for joining us for another session of the Lencred Credit Geek Q&A. And if you want to know more, visit us at the link below, www.lencred.com. Thanks.